All right. Hope everyone's having a nice weekend. Looking forward to a fairly concise weekend market update in terms of agenda. I'm going to go through Bitcoin and then I'm going to compare Bitcoin to gold from two different perspectives. I'm going to go through SPY, I'm going to go through NASDAQ, and then I'm going to go through the dollar. And then we're going to call it from there. Did a bunch of updates for the members on various other singular names that we get asked about a lot. And so keep on the lookout for more of those. But for now, this generally guides, I think, the thesis for a lot of the things that we cover and we have a lot of interest in. This is a chart that, and again, just as a reminder, I'm not a financial advisor. Don't take any of this as financial advice. All the things I talk about, they could go up, they could go down, they could go sideways. Market is the only arbiter of truth and will ultimately tell us after the fact whether our assessments were correct or not. Um, in these periods of volatility and uncertainty, I see a lot of, especially on X, a lot of accounts that kind of claim to trade in and out of these things. I think that's the last thing that any of us should be doing. And I say that a lot because I think it's important. If this type of volatility were easy to project, machines would do it instead of people, and they don't. Hedge funds, the minority of hedge funds outperform the S&P. There's a reason for that. If tops were easy to sell, they wouldn't be tops. If bottoms were easy to buy, they wouldn't be bottoms. These are empirical facts. Okay, something doesn't drop to a level because it's an easy level to spot as a good entry. There would be way more demand than there than there is when something bottoms. So that just means, 1% or the highest minority of people are able to identify that as a potential bottom area. And the same thing goes for tops. Our minds are ruled by rational thought is ruled by fear and greed. Fear can make us shut down and abandon rational thought. That part of our brain is when it's stimulated by fear, and that same concept holds true for euphoria and greed, clouds any rational thought. And so the contra to that is euphoria clouds the judgment of the masses. And if it was an easy place to spot a top, it wouldn't be a top. And if most people could sell a top, wouldn't be a top. I digress a little bit there. You go look at someone on a street that you grew up on, a grandmother, for example, that has no idea about any of this technical analysis, and her long-term portfolio has probably outperformed 96% of traders. Uh, there's a reason for that. The doing nothing and letting the market do its work has proven the test of time. I'm here to give you my thoughts on where I see symmetrical opportunities, asymmetrical opportunities, level by level by level. Uh, and with swing kind of stuff, that's the way I approach raising cash to be able to buy Bitcoin if it ever drops 50, 70, 80, 90%. But again, the long-term thoughts for something like Bitcoin, where I have my highest convictions, is I'm not going to be able to spot accurately the bottoms and the tops, and a 10-year view. From now, I see it going to at least $1 million. The path there is going to be very, very difficult to project. I have a very strong opinion on what I think is going to happen in the short term, but even that doesn't cloud my judgment and make me think that I'm going to be able to accurately predict if it hits my target. I'm fully prepared for, if it hits my target, it doubles in a month. Okay. I'm fully prepared for that scenario. I've seen it happen before. In MicroStrategy, for example, I've been projecting that on this channel for 2 years. It doubled my high-end target in November of last year. Um, Same thing happened to me with Riot in 2021, where I sold actually one of the better swings. Sometimes I'll catch the meat of these moves. That was a situation where I sold it, and then it doubled the next week. So, and that was the top. And so I didn't catch the top. I was a week away and I was still 100% off. Okay. So just some thoughts there for a lot of the new listeners, subscribers and members, about more of, what I'm here to try to do, and that's project what I think is going on at the moment, but also um, not give you the impression that these are, there's actionable stuff that's going on here with myself in the short term on the long term portfolio. That approach, I think, is going to get people frustrated and more people burned. So, with that, let's jump into it. We have a lot of new folks to join us, and so I felt like kind of resetting the stage for those that haven't had a history with me. All right, Bitcoin. We've had this chart going for the better part of several weeks, maybe a couple months now. This is not, there's nothing bearish about this setup. This is a reaccumulation on a massive scale that goes back to February 2021. So we're working on about 4 years of a reaccumulation event. Automatic rally, upthrust, spring, test, LPS, you jump this creek, sign of strength at the previous all-time high, consolidated for 7-8 months, in and around the 30-week, above the cloud, and just entered expansion. Okay. So I know it's kind of a joke when some people say, oh, this thing is just, the bull market is just getting started. Well, there's two perspectives, and I respect them both. No one's right, no one's wrong. The market's right. That's going to tell us that after the fact. The perspective is, well, the bull market really didn't get started. From peak to trough, we're at 400, and where we stand right now, 441% gain. That's also kind of a false assumption, right? That's an assumption that everyone got this entry, and that just isn't the case. This is the very small percentage, and so the average realized price of coin accumulated, I don't know what that is, but maybe that's more of an important metric. But I digress. The point being that this has been going on for the better part of 2 years. But what's been going on is, from a reaccumulation standpoint, working its way out of reaccumulation. And theoretically, a case could be made for, we just entered expansion technically in October of this past year. And none of us know how long or how high this expansive phase could go. And so when I look at the market from that standpoint, that side of the coin also makes sense to me, and I'm willing to adapt based on more information that the market gives me. For right now, the market's telling us that this 30-week has always been important, and it continues to slope up. There's no change in the slope of this 30-week. Now, I've always said the reaction at this 30-week, which currently is at 83,200, is important on whether I think we're going to get an immediate V, or it takes a few more weeks or a few more months, and we take another stab at a low before we go up. I don't know. That's speculation. But right now, we're above it. It's not decisive, right? I want to see decisive action. But of course, market makers know that. And so could they just bleed this thing here for a little while and then it does something like that? Absolutely. I'll get into maybe some more speculative paths in the with the members. But for now, there's nothing bearish about this setup at all when we zoom out. When we look at gold, there also it's actually the opposite. Not only is there nothing bearish about this setup, but there's something extremely bullish about it. I've been talking about the extended fifth wave for the better part of a year and a half, 2 years now. It's what I believe is unfolding, and the price action just continues to reaffirm that. This is a chart of gold from 1970 to 1980 on top, Bitcoin on the bottom, Bitcoin current price action from 2017 to right now. And we can see, forget the wave counts, just from a price structure standpoint, very similar type of price action up to this point on the gold chart up here at the top, prior to this parabolic move. Okay, and what do I mean by that? The market had a level of price action for a couple of years, leveled up, okay, and then consolidated in that area for about as much time as it consolidated in the prior level before it leveled up. That essentially is your 1, 2, 3, 4 from a wave standpoint, reaccumulated here for that same amount of time, broke out of the reaccumulation base, check back to it, and then 1, 2, 3, 4, 5 in an extended fifth wave move. What's Bitcoin doing right now? Bitcoin, in my opinion, is the hardest asset ever created. Trumps gold in many ways. I'm not going to get into that in this video, but Bitcoin is very similar. We see a 1-2 type correction, massive accumulation at a level. It levels up in the form of a 3 and then spends approximately the same amount of time reaccumulating, rounding bottom here, breaking out of the reaccumulation range, checking back to it as it did this past summer, and then broke out, expansion. And I think we're in the process of completing our 1-2 correction here, which if this follows suit, in terms of an extended fifth, we've got 3, 4, 5 potentially in front of us. And these are the steepest rallies of the entire cycle, if you look at it from that standpoint. Let's look at it from another standpoint, and this is all. This is my projection. We're going to find out. And the beauty of this is I don't see a lot of this being presented, which makes it even not probable because I don't get probabilities from charts, but makes it more asymmetric to me when there's less people looking at the same concept. I like that. And so here's a second way to look at this concept is the current Bitcoin reaccumulation that I just shared, right? Kind of a cup and handle, and that's all these cup and handles are. Handles take all sorts of shapes. They're just corrections, whether it's a zigzag correction, a flat correction. Gold up to this point on a slightly about the same time frame has done the same thing, where you have 3 waves of overlapping price action, ABC. Bitcoin, 3 waves of overlapping price action, ABC. Starts the end of that reaccumulation event, and then it comes up and out of it, checks back, and then expansion. Gold, same concept here. Massive reaccumulation, checks back into the form of this handle, zigzag correction, and then 1, 2, 3, 4, and is in the process of a massive extended fifth extension. And so why are we to believe that Bitcoin is going to decouple from gold at this point, when in fact, since 2021, it's been following the same consolidative price action, not to a T, but pretty close in terms of overall structure, breakout, timing. And so that also reaffirms the position. Next, SPY. So we presented this chart. We've been presenting this one for the better part of, I think, a few weeks, and talked about possibilities. Should this low be breached? I said this low end demand is the next kind of zone of interest and is more than not more than likely, but is a plausible target. Last week, I think we said we were looking for one more leg down into Thursday, Friday. We got a reaction Thursday. Could the bottom be in? Sure. Could that be also the start of a counter trend rally? Sure. This is kind of what I think everyone's expecting. It's not what I'm expecting. And I'm going to get into the reasons why in the next ticker that I cover. Now, looking at the volumes are deceiving. They don't tell us much. Why? Because I'll show you why. Volume wasn't that exceptional on the Friday bounce. We saw higher volumes in this downtrend leading up to it. However, what did volume tell us here? Right? Big volume bar on this A wave. Didn't tell us anything. This was the start of a ABCA, ABCB. And what I'm claiming is this 1, 2, 3, 4, 5 wave move into C. So 3, 4 being made, and then I'm expecting this to come out in terms of a 15 to 20% rally is the next major move. And so volume didn't tell us anything on that A wave. Did it tell us anything on any of the major inflection points or reversals before? It did here. Okay. That marked the bottom of C, so big volume there. What about here? Did volume tell us anything here? Nope, it didn't tell us a damn thing. And so let's look at here. Did volume tell us anything? No, it didn't. So volume is inconclusive, is what I'm getting at. Simply looking at volume is not enough. For me, it's kind of a confluence more so of how many waves came into this move, how many were overlapping, right? And A, B, C, A is going to have, right, 3, B is going to have 3, C, 1, 2, 3, 4, 5. What do we see here? 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Most common in a C. If this was an A, and this was a B, and this was a C, then this would have to be A, B, and then, I mean, C, 1, 2, 3, 4, 5. And so that's plausible too, that there is another, big move down next week. So next week is very telling for us, okay? Next week is very telling for us from that standpoint. If we get another swoosh down, then that's most certainly in the cards. But again, not my base case. Why? Because I come back to NASDAQ and I say to myself, everyone's calling for a trend change, or, and I think I've already presented this, but I'm going to present it again, a trend change or a potential top in markets when there's a lot of fear in the markets, and we just haven't seen evidence of that. We haven't seen evidence of that. There was the two times that we did have where we saw much further downside, there wasn't panic in the market, meaning, oh, the bull stepped in and this is a buy the dip. No panic. And that was A, B, C. So that's kind of the scenario I'm talking about here, is where people think this is an A, we've got a counter trend and then another major leg down. Same here, right? Is okay, maybe this is some type of A and counter trend, boom. But the commonality here was the market was not fearful. The market was not fearful. When was the market fearful? Over the course of the last 2 years. Not 2 years, this is 2019, I'm sorry, 6 years. The market was fearful at times where V bounces were incoming. Okay, 1, 2, and here's the line of fear. Okay, that's the baseline. That's extreme fear. 3, 4, 5. Let's do the corresponding price action. V recovery, 83% before consolidated. This is after a trend change, so I'm not going to count it, right? We got a sloping 30 rejection on the underside and close in the cloud. We haven't met those conditions yet, so I'm not counting it. Take that one off the board. Here, 31% rally, 22% rally, 28% rally. And here we are with a higher low, no change in character. Okay, we'd have to breach this low for us to see a change in character, which would also, let me zoom in, because this is important. We would also have to see, we would see a lot of the same things we saw in this last trend change, right? Where you have this 30-week starting to flatten out, point down. Let's just say, this is what's going on here. Boom, okay, change of character, and the low comes in here, and then we do something like this, reject, and then we're back in the cloud. That's what the price action would have to look at, break a structure. That's what it would have to look like for us to say, okay, we're in a new downtrend. None of that's happened yet. The only thing that's happened is we made a higher low at points where the market has been very, very fearful, that has preceded on average 23, 24% rallies within 6 months. So that's the environment we're in until proven otherwise. That's the environment that Bitcoin is in until proven otherwise. And folks, I hope you enjoyed this video. Have a great rest of the weekend. Take care.